Hello everyone, guys, let's discuss the question from September-December 2023 attempt. So this is an investment appraisal question. So let's start from the requirement. Discuss the difference between risk and uncertainty in the context of investment decision. Next question is, calculate the nominal NPV of the investment project and comment on its financial acceptability. Calculate the sensitivity of the project NPV to the change in the level of contribution per unit. Then calculate the sensitivity of the project NPV to the changes in the discount rate. And the last part is compare and contrast sensitivity analysis and probability analysis as method of assisting investment decision when there is more than one possible outcome. Okay, let's start from reading the scenario. Scenario padhte hain. Then obviously we will discuss this question. Okay, P company produces household electrical goods for its home country market and for markets in the neighboring countries. P company is planning to make a major investment in a new production facilities in order to produce an upgraded model of its cooker. P company finance director has assigned probabilities to a number of possible sales volume of this new model based on P company previous experience of launching product upgrades. So this company finance director has assigned several probabilities. He has calculated annual expected values for sales for the 4-year time period over which the investment will be assessed. However, after a number of years of strong economic growth, P company home country and its neighbors appear likely to enter a period of recession, meaning that consumer may be less willing to spend money on new kitchen goods. So this is the risk you can face in future. The initial investment cost will be 39 million. Finance director has assumed that there will be a zero realizable value at the end of the 4-year. 4-year is a time period. Working capital can be ignored. Expected volume of sales are this. The expected contribution from the upgraded cooker throughout the 4-year is $200 per cooker. This will not be affected by the rate of inflation. So contribution is given and it will not change with the inflation rate. Incremental fixed cost excluding depreciation are expected to be $2.5 million in year 1. They will increase by the rate of inflation in each year 2 to year 4, which are predicted to be as follows: 6%, 4%, 3%. Company pays corporate tax at a rate of 25% per year, 1 year in arrears. No tax allowable depreciation is available on the investment. Company currently uses 11% as the after-tax discount rate to appraise the investment like this. One of the other director has commented that he thinks the level of contribution that the finance director has assumed is too high. He also wondered that with the economic uncertainty, the cost of capital should be higher, not 11%, it should be higher. The finance director has said that he will prepare sensitivity calculation showing in relative terms the level of change in contribution and discount rate that would produce a nil NPV. He will assume that contribution will be lower by the same percentage each year. Okay. Another director has stated that she has heard that probability analysis can be useful in decision making and wonders if this will be the same as the sensitivity analysis that the finance director is going to prepare. So that was the question. So number 1, discuss the difference between risk and uncertainty in the context of investment decision. This is a very easy question, to be honest. An examiner has already asked in many of the previous past paper questions. So remember, investment appraisal is the evaluation of projects which are going to be implemented in future. Okay, it involves future, and future is uncertain, and it involves high cost and revenues which need to be assessed. Risk and uncertainty are applicable wherever there are several possible outcomes. Then you can explain one paragraph for the risk and one paragraph for the uncertainty. Risk analysis will be applicable on a situation where there are several possible outcomes and based on past experience, probabilities can be assigned. Assigned to those outcomes. If you look at the question, here the finance director has assigned probabilities to a number of possible sales outcomes based on the company's previous experience. It is evident that finance director has assigned based on past experience and calculated expected value of sales volume. Okay, analysis of uncertainty is different. Analysis of uncertainty includes will be applicable to a situation where there are several possible outcomes, but however, on the basis of past, company cannot apply on those outcomes. Okay guys, remember one thing. On the basis of past, you have applied the probabilities. Here, director has applied the probabilities, but you know, economy is uncertain. If economy is significantly different and uncertain from the past, you cannot use the past data. If the economy is changing and significantly different from past, finance director may have used the wrong approach by applying the past probabilities on the future sales data. This sales data can be misleading. Okay. First of all, you will explain that investment appraisal relates to the future. It's the analysis of the future cash flows, and future cash flows are uncertain and risky. Then you will explain that risk is a situation. Risk is applicable to the situation where there are several possible outcomes, and on the basis of past, you can apply the probabilities on those outcomes. Uncertainty is a situation, is applicable on a situation where there are several possible outcomes, but you cannot apply probabilities on those outcomes. Then you will explain that some methods cover the sensitivity, some method cover the uncertainty, some method cover the risk. However, if you are applying data on the future based on past, that may be misleading if the future is different from the past. So that's the answer of first question. Now let's move to the second question. B, first part is calculate the NPV and nominal NPV of the investment project. So this is a 4-year project. Part B. NPV of project. First of all, let's put the 000 round off. Years 0, 1, 2, 3, 4. First of all, let's do the contribution, because sale price is not given. Directly contribution is given. So first year contribution is 12,000. Was written somewhere. Sorry, it is 200. 200 into 60,000. So 200. Let's write the sales volume first. Sales volume. 000 round off. 60, 150, 140, 80. Contribution. It is 200 per cooker. 200 per cooker. 60 into 200. And then 60 into 200 into 150, 200 into 140. Control C, copy into the next cell. Okay. Next is fixed cost. Fixed cost is in first year 2.5 million, 2,500. Then it will increase by 6%. Then it will increase by 4%. Then it will increase by 3%. Fixed cost. Okay. Next is profit. Because there is no depreciation here. Tax is 25%. 1 year in arrears minus into 25%. So we also have to make a 5th year. X. There is no working capital change. And then there is initial investment. That is 39 million. Net cash flows. Sum of all cash flows till profit. Discount factor is 11%. Okay, let's calculate the NPV. So NPV is NPV bracket start discount factor, comma, select all cash flows from year 1 onwards and then plus the year 0. 5847. So this is your NPV. So as NPV is positive, we should accept the project. Comment. Project is generating positive NPV. It is increasing the wealth of shareholders. Company should accept the project. Then let's do the second part. That is sensitivity to the change in contribution. To change in contribution. Okay. First of all, write NPV, that is 5847. Then write present value of after tax contribution. Okay, let's do in the working. Copy the years and 000 here. Copy the years and 000 here. One more cell. Okay, write the contribution. Refer with the cell. Refer with the cell. This is contribution. Apply the tax here. Apply the tax here. Tax is 25%, 1 year in arrears. Minus into 25%. Okay, this is after tax contribution. Now calculate its present value. Present value of after tax contribution. Simply apply the NPV formula. NPV formula is used to calculate the present value. 11% bracket, comma, select all cash flows from year 1 onwards. 51268. This is B34. B34. Divide the NPV with this. Convert this into percentage. 11.4%. So you can write if contribution falls by 11.4%, NPV will become 0. Okay. Then the next part. Part third. Sensitivity of NPV to the change in discount rate. Of NPV to change in discount rate. Okay. Whenever you are calculating sensitivity with the NPV, you have to calculate the IRR. So let's calculate IRR of the project. So IRR, bracket start, select all cash flows. So IRR is 11.4%. Cost of capital is 11%. So let's calculate the percentage change. 18.4, bracket start, 18.4 minus 11 divided by 11. So you can write the comment that if cost of capital increases by 67% and becomes equal to 18.4, NPV will become 0. NPV will become 0. That's how you will comment. Third requirement is compare and contrast sensitivity analysis and probability analysis as method of assessing investment decision when there is more than one possible outcome. So technically, how to approach the answer? Part C. One paragraph should be on sensitivity analysis and one paragraph on the probability analysis. And then you should write the points and then discuss all the points. Like, first of all, write the definition of the sensitivity analysis. Then its pros and cons. So let me fill the sensitivity, then you can fill the probability analysis. So what is sensitivity analysis? It assesses that how responsive project NPV to the changes made in the variables used to calculate the NPV. So there are many variables. For example, selling price, sales volume, contribution per unit. In this case, contribution per unit and discount rate. It assesses that if contribution falls, how much NPV will fall. It assesses if discount rate increases, how much the NPV will fall. So this is sensitivity analysis. Then you will explain that sensitivity measures the impact of one variable on the NPV in isolation. It does not consider the interdependence different variables on each other. It also does not consider probabilities of outcomes. It will explain that if contribution falls, NPV will decrease, but it will not explain that what are the chances of decrease in contribution. Okay, but there is an advantage of sensitivity, that it is easy and it helps in decision making. Then you will explain that what is probability analysis. The biggest advantage of probability analysis is it considers the probabilities. The another advantage of probability analysis is it considers the change in the factors, like it considers more than one factors at a time if they are changing. But the biggest disadvantage of probability is, let me explain that. It calculates the expected answer, expected NPV, to help in decision making. This expected NPV is an average answer. This is only possible if company has to take this project many thousands of times, which is not possible theoretically. So it assumes the average outcome, which is probability analysis का जो आंसर होता है ना, probability analysis calculates the expected NPV. Like if there are 3 events, event 1 there is a chances of event 1 40%, there is a chances of event 2 50%, there is a chances of event 3 like 10%. So expected answer is to take the average of all these. In reality, that average will never happen. That average will only happen if you repeat this process many thousands of times, which is not possible. The biggest problem of probability analysis is it calculates the expected answer, which cannot be achieved in theory, which is just an average number. Okay, so if there is an average number, so the problem is the average cannot be happen. So probability analysis can misguide you. Okay, so let me explain again. Sensitivity analysis advantages: it's simple to apply. It helps in decision making. It will tell you that which variable is critical. Like if there is a chance that if 5% selling price decrease, NPV will be 0. If there is 20% contribution will fall, NPV will be 0. So selling price is a critical factor. So number 1 advantage of sensitivity is it is easy to explain. Number 2 advantage is it will identify the critical factor, which obviously you can monitor. But the biggest disadvantage of sensitivity is it calculates the answer in isolation. It will not consider the interdependent factors. The second disadvantage of sensitivity is it does not consider the probabilities. It will tell you if that factor increase or decrease, NPV will be 0, but it will not tell you that what are the chances of that event happen. Okay, then probability analysis advantage is it will consider the probabilities. Second advantage of probability is it will consider the interdependent factors. It will consider the change of 2 factors at a time. But the problem of probability is it calculates the expected value. It calculates the average answer, which cannot be happen in future. Why? It can only happen if you repeat the process many thousand times. So the probability analysis have a problem of flaw of average. In reality, average is not going to happen. So you will explain one paragraph on the sensitivity, one paragraph on the probability analysis. That's the answer of C part.